We're going to zoom in right away. Thank you, our panelists, for joining us today. So today we have Samantha Brayshaw, and then we also have Sandy Leggeat. Before we zoom in, can I just get you to introduce yourselves, please?
I'm Sam Brayshaw. I am currently the Group Finance Director at Monzo. So I am more of a practitioner in the reg space, looking how we can use technology to ensure that our reporting is effective. I also had the benefit of looking after the internal controls team. So it's a good crossover to ensure that you do it in a way that meets all of the regulatory compliance needs. Sandy?
Sandy Leggeat, 20 odd years doing various versions of RegTech. So in compliance initially, and then ran market risk, and then most recently looked after regulatory financial reporting and the engineering side for Goldman Sachs. I also sat on the Bank of England and FCA Reporting Transformation Committee for the last 2 years. So I'm sure some of that might come up in this conversation.
Yeah, I'm looking forward to that. Thank you again. So before we open the discussion today, if you do have any questions, please put them via the Brella app, and we will take questions at the end of the session. So we're going to start with discussing a little bit about the ways that the industry is adapting to RegTech to help with reporting obligations. So Sandy, do you want to start on that?
Sure. I mean, I think the industry as a whole is constantly in flux when it comes to like new RegTech and having to respond to it. And having to have technology to meet those new regulations is key. If you start looking at large financial institutions, I mean, just the wealth and breadth of commitments that they have to meet is not something that you can realistically do manually. I think most large financial institutions are probably looking at thousands of deliverables on an annual basis, just in the financial space. Never mind then compliance and risk and all of the other transaction reporting that has to take place. So yeah, I mean, absolutely fundamental to actually being able to deliver.
So speaking from the other side of the fence, obviously we're looking for technology to help enable us in our regulatory reporting in other spaces. I mean, even an organisation of our size produces over 500 regulatory reports in a year. It is possible to do that via spreadsheets, but obviously the more you can utilise technology, you're bringing in a safer environment for yourself. Obviously tech doesn't abdicate responsibility. You still need to ensure that you own your interpretations, you own your calculations, you own your outputs. But a lot of these tools are built with the knowledge and technology these days that can help you understand when you've got validation issues. You can use reg interpretations equipment to make sure you've got your horizon scanning working and look for pointers. So for me, tech is an enabler to ensure that I can deliver safer regulatory reporting. And obviously with 500 of them, it saves a bit of time too.
Do you think that the size or the nature of the business matters in terms of how they encourage adapting to regulatory reporting solutions?
I've worked at a variety of organisations, so I'm not so sure that size matters, because even in larger institutions, you find that you do end up resorting to manual intervention, and there is a time and a place for tactical solutions. I think any organisation that's looking to grow, even if you just use technology for the last mile, which is the final upload into the regulatory portal, you're bringing more safety for your organisation. It's easy to get some of these validations wrong. So I think, yes, and funnily enough, I was having a chat with another organisation that felt they were too small for technology and like the nimbleness of being able to adapt their spreadsheets to respond quickly to regulatory change. I think, having seen all sides of the spectrum, I'd much rather have the comfort and guidance that technology can offer. The key thing is, though, not to customize the system so far that you end up doing manual solutions to get the output. So buy a solution, keep it pure, and make it work effectively.
Agreed. And the regulatory environment is changing so much. So what are the latest methods are you seeing for reporting in such a ever-changing, complex, changing environment?
I can go first on that one. I mean, I think probably agility and transparency are probably the two most key things. I think if you look at where probably everyone starts in the evolution, it's probably relatively rigid and static, and then very quickly again as the numbers mount on even anything done systematically, then regulatory change comes in, and that comes in not on an annual basis, quite often on a even quarterly basis. And to try and then adjust all those things, it's almost as impossible as trying to do it all manually. And so, I think having frameworks and technology that allow you to adapt very quickly to address those changes, but also doing it in a very, very transparent way. Because the second challenge you've got is, not just for those regulatory changes, but it's the audit. It's the, regulators wanting to confirm that you're doing things the right way. And so having much clearer transparency through whatever you've got within your RegTech or internal platform builds is absolutely crucial to be able to explain exactly why this number is on this form in this way.
And what about you, Sam? Do you have any practical approach to adapt the latest methods that you've probably seen?
Yeah, sure. Part of it's what he said. But actually, for me, the really important thing here, and I appreciate I'm speaking at a RegTech conference, but you need the overall regulatory framework to be in place, and then you layer in the technology into that framework. Now, you need to get that right, even for basic reporting. And if you have got it right, you can then flex it to meet the more complex and changing environment as it evolves. But if you haven't got that regulatory framework in place to start with, from the identification of your data, your application of any interpretations of rules, and then any calculations that follow, of which tech enables a lot of, but you also need a lot of brain power behind that. Get that right to start with, and it's automatically scalable.
So what do you think financial institutions can learn, or how can they prepare best for the potential impact of a lot of the digital reporting that is coming, and then the digital transformations programs that are also coming through? I don't know if Sam, you want to start on that?
Yeah, I'll start because he's the expert. Rather ironically, my first call at 9 o'clock this morning was on data governance and what it means. And obviously, when you work in a fintech and you're talking to a data scientist, it can be quite an interesting conversation. But I think the core principles remain is that you really need to understand where you're sourcing your data, and are you sourcing the correct data? Furthermore, are you sourcing all of the attributes that are required to ensure that you can follow that data through all of the, ETL, I can't remember what the definition is, through to the use in your report. So data is absolutely critical, but you actually have to understand that data as well, because it's very, very easy to mismap a data cell or not properly understand. Don't forget, you've also got to apply the data to the interpretation. So full data lineage, a full data dictionary, whilst not easy to achieve, is something that we continue to strive for. And obviously, once you've created it, you've got to maintain it. And every time a new product comes along or a new regulation comes along, you need to apply those disciplines and controls to make sure that your data environment stays current.
So, yeah, I think data and the elements of data are at the heart of all of it. If you go back to sort of the FCA's work they did sort of 2017 and onwards around sort of machine readable instructions, and all really, really good and very insightful steps forward. And a lot of that was carried forward into like the reporting transformation and the data transformation committees and the working groups that have been set up more recently by the Bank of England and the FCA. And when you try and look at all of it, whether it's like pull versus pushing data, whether it's machine readable instructions, and you peel back the layers of almost every single one of those things, you actually get back to data. You need good data, you need to understand the data, and you need to talk about it in a common way. And that's just key. So you have to have some standard models, you have to have some standard definitions. Everyone has to really call an apple. That includes hopefully multiple regulators over time. And once you have that, then you can start to think about how do you electronically define your regulation, because then the regulation is based on the attributes that you're defining in your data. And so it's key. You can't run before you can walk. So it's a little bit of baby steps, but I think the committees are thinking about it the right way. They're thinking about how we define those things in the right way, how to look outside the box in many ways. But it's still regulation, so it is a little bit slow, and it is going to take time to actually do a lot of that transformation.
And I think for firms, sometimes that is a challenge, being able to kind of define what's within scope and with the data and sort of just running from there. So, what practical steps could you maybe give firms on how they go about that?
I mean, I think modeling your data and actually defining the data that you have is key. I think if you were here earlier, one of my ex-colleagues, Adam, was talking about this, having sort of data modeling standard, having that as a shared enterprise within your financial institution. Ideally, not having that based on multitudes of many-step data. You want to try and have that modeled on authoritative data sources, so that you define things once, you store things once, you change things once. You don't have multi-hop because it's a bit of a ever-changing potential failure. And then once you've got that model, if that model, the more standard that model can be, either internally and then ideally externally, on either industry shared standards or hopefully even regulatory shared standards, then everyone then is talking on the same page. It means then your financial institutions, your RegTech, your regulator, they're all calling an apple an apple.
Thank you for that. So, presumably, these programs are moving towards, greater data granularity. How do you think financial institutions should go about with trying to keep up with these requirements and trying to meet with these requirements? I'm going to pass that over to you, Sandy.
Okay.
Sandy, it's a bit confusing. No, you go, Sandy.
I'll put a little bit in. So I mean, I think when you're looking at granularity is kind of really the next evolution of kind of that standard in many regards, right? Because today, if you look at regulatory reports and filings, they're very prescriptive. They're defined. This is what you're reporting. This is how you're reporting it, and this is the data that we want. To then take that data and then try and use it for a different use case, the chances are you're not going to get the right answer because it's been somewhat handcrafted by institutions to meet that specific regulation that was filed for. Where the granularity comes in is, that gives you the transparency potentially to remove 5, 10 reports. Then if you can come up with a standard granular data set that would meet all of those needs, that still needs that standard. You've got to all be calling things the same thing before you can go down a level to the granularity to then have the shared usage across the different use cases.
And that's going to be quite a challenge for us, actually, because I think many of us in the room have had challenges with SIT codes, where you define what your company attribute is. Now, this is up to the individual member of the company when they file their records with Companies House. But as institutions, we have obligations to ensure that those SIT codes are correct. So we all know what a SIT code is, but it was amazing how many agricultural organisations I found in one of the places that I worked, because it happened to be the first on the drop-down list. Now it's our obligation to change that. So even when we have got a common understanding, I think there's still a great risk of error, and we need to think about the quality of data as well. And I think that the second point, just touching on granularity, we just need to think about the volume of data that we're creating. Even a small startup like ourselves, we've got 7 million customers now. Just think how many data attributes each of those customers have and how many points that we have to map into for each of the regulatory reports that we produce. So the more granularity that comes, the greater volume that comes in the data that we need to process, and therefore the more pressure we put on RegTech technology to be able to process that data.
And just to add, I mean, the privacy concerns as well. As you go down that level of granularity, the volume of data that you're sharing that starts pushing into the privacy spectrum is just massively increased.
So, just building on that further, to what extent do you think firms are moving away from, functioning, moving away from the siloed data and, really trying to kind of build their data further down and get that detail, and how they're able to kind of enable that overarching data model when it comes to data granularity?
I mean, I clearly touched on it slightly earlier, but I think if you look at the evolution, I think probably most firms will go through is like they have data, they need to get it to report. How do we do that? Right. Well, if you give me a file with that data, then I'll produce the report. And then okay, well, now I need to produce 2 reports. So actually you can make that a system like file and let's load it into a database and get a couple of reports of it. Brilliant, that's working. And you just build and build and build on that. And then, the department next to you does a slightly different filing. So they do the same. And before you know it, your financial institution is made up of all of these siloed data stores that are used for XYZ use case and ABC use case. And you're having to maintain all of them and try and keep them consistent and probably reconcile them manually. And the problem just builds and builds and builds. So next evolution is really then to try and centralize, move to a data lake. Very quickly, you can end up with a data swamp. So you have to be very, very cautious in that one. But it certainly is moving in the right direction, and it allows you to start modeling your data, actually abstracting away from that underlying data source in many respects, joining much more of your data to be more consistent. So it was evolution. And I think most people have probably tried it, gone there, and or are there. And then I think really pretty much where the world seems to be going now is, well, if you've got it modeled, it doesn't necessarily need to be in a data lake. You could actually go back to the original data sources and just map straight back to those original sources. And I think that's probably the best forward strategy that we have at the moment. And I think things like cloud technology is just making that much more accessible for everyone because it's giving you the increased capacity in a lot of those sources to then have it modeled correctly and have it more broadly accessible across financial institutions.
So we've probably got a data puddle at the moment, and we're just working towards building more of a data lake. So even in small institutions, like I said, you can have a need for a lot of data. We have specifically been building a regulatory data mart and understanding through the lineage, the documentation, the controls, etc. I look after other parts of the finance function, so we're now extending those principles out across all of the data that we use across finance. And I think the important thing is we've also got to remember to look at this data. It's very, very easy to produce the reports and lose line of sight on what the actual answers are. So data is only as good as the processes that you put it through. So we put a heavy emphasis on reviewing the outputs, not just from a regulatory reporting perspective, looking at variance analysis and seeing whether or not it makes sense, but linking it across on a monthly basis to the monthly reports that we're producing, checking our off-balance sheet commitments, etc., checking that the numbers make sense. Can we find the business reason behind the drivers? So I think the key thing for me, as much as anything, is by all means find the right machinery to connect your data, even if you are driving right from the individual sources, but remember to look at that data too.
And from the regulator's perspective, what would you say is the direction of travel in terms of, with all the firms are doing now, what should they also be looking at when it comes to, moving away from that data puddle and, trying to just stay ahead of the incoming regulatory reporting, for the Bank of England and the FCA. They're talking a lot about innovation. They're talking a lot about making sense of more technology. So where do you see that direction of travel, and where do you see that impact on firms?
I think the level, the direction that we're going to go is probably more regulation, right? So I don't think it's going to get any easier for anyone. So whatever path forward financial institutions put in place, you need to be continually trying to meet the next layer of regulation and keeping up with the regulatory change of the existing. I think from where the regulators are thinking more strategically for a way forward to try and improve this is they are very much feeling a lot of the same burden and the problems that financial institutions are. They're having to deal with the data on the other side. It's not clean. It doesn't match between this bank and this bank. And so they're trying to make use of somewhat substandard data for all the same reasons that financial institutions have problems they have today. So I think a lot of with the reporting transformation, with the data transformation committees, they are trying to come up with a standardization of calling data and defining data in a clean way, and then identifying and solving some of those bigger problems, whether it's LEI, whether it's SIC codes, all these very common, entity-driven data points that are just, probably a thorn in everyone's side. They are slowly trying to figure out solutions for, to try and standardize those. But then we're talking about that being the regulators in the UK. You then have the same problem with regulators around the world, and then trying to have any sort of consistency between them. So I think it's going to be a constant challenge but working as best you can as financial institutions and the broad industry with the regulators to try and improve what we do today, but also help set something that works for everyone in the future. It's I don't think anyone's got the silver bullet. I think it's unfortunately quite a lot of work to unpick all the stuff that's already there, as well as then factor in all of the newer regulatory commitments that are coming our way.
I think for me as well, though, a lot of this data we create in the first place, whether the regulator needs it or not, they're one of the users of that data. But every time we process a transaction or, open up an account for one of our customers, it creates a whole set of data attributes that are used by multiple parties. So for me, a lot of the information that we're putting together to serve our regulatory reporting requirements or our financial requirements are there anyway by virtue of the fact that we do business. So I think for me, a lot of it is just understanding the level to which the regulator wants to see that data and how we access that data in a way that makes sense. I think the one challenge I'd give to myself on that is obviously ESG reporting. I mean, that hits my financial reporting, it hits my regulatory reporting, and at the moment there's no agreement on how many am I going to have to start ingesting all of the flood data into my models, or for all of my, do I need to know who's running a petrol station, or who's running, using different types of trade in different countries, etc. So it's again, though all that data exists, it's just how we bring it all together. So I have a lot of sympathy for the regulator because, like us, they're trying to use the data for meaningful analysis, but a lot of this data already exists. We just need to get smarter at how we aggregate it.
Yeah, and one actually point you kind of reminded me of there, Sam, was firms capture so much of this data at inception, whether it's like account opening or whether it's transaction level, and even a lot of it at that stage meets some sort of regulatory standard or industry standard. That's the other thing that people should be considering. Like, can those standards be uplifted slightly to capture all the data required from a regulatory perspective up front? Because where you end up having a lot of problems, whether it's in loans or whether, other bespoke derivatives, you end up having this attribute or that attribute you just don't have. The data isn't maybe not even being captured. And so having that set in standards right at the very start, when the transaction's happening, when the client's been onboarded, it just makes the reporting thereafter so much more straightforward. You're not trying to merge data, just for this report or that report.
I think the final thing I'd add there is obviously through reporting, we're creating data too. So all of the risk weights that we're creating, the calculations and the ratio. So it becomes an iterative cycle as well.
Thank you. So with all that's being said, I'm probably going to move on to, we want to leave some time for questions. I'm going to take the last question. How do you think financial institutions can use technology to improve their reporting workflow and significantly reduce the manual interventions and the manual inputs, and really just take opportunities of all the the RegTech solutions that are out there?
I'm happy to start with that one.
Yeah.
So I think for me there are some really, really good tools and technology out there that we should look to use, but make sure you're buying the technology that solves the problem that you're trying to address. Don't force fit your processes into a solution just because you think it's the right outcome. I think one of the key things, and again, because I have the excitement of looking after internal controls too, what the regulator is, I wasn't being sarcastic, I promise, what the regulator is looking for, or even your auditors, are evidence that you've performed a process. You know, what were your workflows? Who signed off? Were there any late adjustments? A good one on financial accounting is who was posting journals at the weekend, for example. Is it around fraud and, you know, checks like that? So I think a lot of the solutions enable you to provide a more seamless report back to whether it's the PRA as part of a Section 166, your internal auditors. You're even getting some external audits now on your ratios too. So for me, the workflow that can be built into tools is amazing. If there's a way that you could connect the interpretations into the tools, some organisations are looking at connecting horizon scanning and the database you use to hold your interpretations in, because obviously we all need a reg interpretations manual. I think there's still a long way to go, but I think the interface that sits on the top of this and pulls it all together is where the real value will come. You know, I need to be able to see who approved the report, when did they do it, when was the interpretation last checked, did they do their data checks. That's where I think having technology solutions in really gives you comfort that your assurance processes have been followed, and ultimately we're here to issue correct and accurate reporting to our regulators or our auditors.
Yeah, so that checks and balances in place, and having that audit trail.
Yeah.
So what about you, Sandra?
So I mean, I think I'll go back to kind of the theme that I was talking about earlier, with kind of thinking about your data and moving to more authoritative data sources. The same is really true of when you come to things like adjustments and edits. Like, I mean, everyone makes them because everyone's got imperfect data, and so the way to try and think about it is, how can you make these changes as few times as possible? Whether that's in this run or even over subsequent runs of whatever report you're doing. And fundamentally, that's getting the data changed upstream. Because if you keep changing it in your last mile set of data, I mean, you are just going to keep changing it. It'll be changing for every report deliverable. It'll be changing for every month or every quarter you're filing. So pushing that either up into a reference source upstream, or actually, getting whatever front office system corrected so that it actually does flow down, is going to by far be the best way to try and deal with a lot of those corrections. In saying that, I can't see, probably in my lifetime at least, a way that adjustments are just going to evaporate. When you're actually thinking about filings, if you're filing a daily report or even a weekly report, you're probably close enough to, when the data is being produced, that you can affect some of that change upstream. But ultimately, if you're monthly and quarterly, you're weeks, if not months, potentially after the fact. So you're never, in my head anyway, going to be able to change that upstream and then get it to flow all the way downstream to then get it on the report for that run. So there's always going to be some level of adjustment required, I think, through regulatory reporting. I think it's just to have the right process in place to then make sure you're not doing it again next month.
And just to add to the point on manual intervention and manual adjustments, a lot of the solutions that you purchase these days for regulatory reporting enable you to put those manual adjustments in such a way that it populates all of the required reports. So you put it in once and it impacts all of the templates that needed to use that data, but it also provides you with an audit trail and an opportunity to explain why you're making that adjustment. When you're sitting there in a spreadsheet and you're adding a plus to your Excel formula, that's obviously a lot harder unless you're diligent and comment on the SAD as to why you're doing that, which obviously we are expected to do.
I think that's absolutely key. Back to that transparency point again that we spoke about right at the beginning. Your data is going to be, it's going to be very clear when it hits the report exactly where it came from. So you need to have a way of showing data lineage, not just for the originated source, but for all those adjustments. Who made them? Why did they make them? Every other artifact, because someone's going to ask, what time they made it, and so on, if someone approved it.
Well, thank you very much, both of you. We've had some questions come through from Bella, so we're going to zoom into that, and probably we'll wrap up with any final comments that you both have. So we have a question: how is technology impacting traditional regulatory reporting? Are you happy to start? Yeah.
How is it impacting traditional reporting? I think there's almost no such thing as traditional reporting anymore, is there? I think we've all been through the various taxonomy changes that come, etc. I think for me, though, I go back to the statement I made earlier. It's about having the right framework in place, and that will remain quite traditional because you're taking data, applying a set of interpretations, doing a calculation, and generating a report. That won't change. It doesn't matter how far we evolve. I think what technology is enabling you to do is operate that in a much safer way and make traditional reporting much less part of your daily work. Imagine if we could actually take the data from the reports that we produce and use it around the business to make strategic decisions. So for me, when I finish the latest implementation I'm working on, we're already training our analysts to be able to do that, to actually go and take the data into the business and use it to drive decisions around what products are best from a capital perspective and things like that. So for me, I think it takes the traditional and makes it modern.
What are your thoughts, Andy?
Yeah, I mean, probably the one thing maybe we didn't mention, I mean, we touched on maybe a little bit, is actually getting the data to the regulator. Back, 5 years ago, that was just Excel spreadsheets for the vast majority of cases. Now, there's probably only a couple of Excel cases, I think, left. The vast majority of it is XBRL or some other XML kind of derivation. So even that in itself is forcing some level of technology to be introduced and moving away from sort of a traditional Excel-based report into something much more systematic with some control around it. And once you're in the world of having a tool to do that, then actually extending that to capture the controls around your adjustments and move further upstream is, I think, just a natural progression as you take that forward.
And the final thing I'd add just very quickly is obviously these technology solutions most often come with an MI package and an assurance package. So you're able to show your CFO and other key members what the data looks like and why it looks like, going far beyond the traditional report that you were creating in the first place.
Thank you. The next question is asking on what are the most pressing challenges that you've seen for regulatory reporters in 2023?
I'll start with that one. I think for me, it's just keeping pace with change. We're seeing lots of, we've got all of the data transformation challenges going on. We've got to think about Basel 3.1. I think the PRA have just appointed a nature person that we've got all of the ESG reporting and the dimensions that it goes to. We need to make sure that everything is complete and accurate and correct. Obviously, we're all trying to still make sure, well, I'm sure a lot of us in the room are still trying to make sure we're compliant with the themes that came out of the Dear CEO thematic findings in 2021 around complete and accurate regulatory reporting. That burden doesn't go away, but we've got more and more pressures on us to try and ensure that our reports are accurate and more challenges to face within that. So for me, I'm always striving to hit the highest standard that I can for report accuracy, but there's a myriad of things that are coming in from the sides.
Yeah, definitely I can relate to that. I work in asset management and, we just moved to EMT version 1, and then with consumer details come through, we've moved on to version 4.1, and it's ever changing and having to keep up with that regulatory reporting and just making sure that even the size of the firm, that you are be it large or small, what tech solutions are suitable for your models and your process and your data can be quite difficult to sometimes just really dissect and understand. So I think definitely that has been a big challenge for me. And that's something I think it resonates with quite a lot of people.
And I think, just before I let Sandy speak, so I can't talk too much, I think the final thing is making sure you buy a reg solution that's scalable, and don't customize it too much, because then it's not evergreen and it's difficult to update. So think wisely about why you're using technology in the first place, and that limits then the challenges you face as you need to constantly upgrade your technology, because you will do for regulatory changes, for technology changes within the system itself, etc.
I mean, honestly, ditto. I mean, I think probably the volume of regulatory change, and some of that's really been multiplied by 2 with post Brexit, because all you're finding is like the European regulations changing and UK regulations changing, but they're doing it on a different timeline. And so now you actually have to deal with 2 separate sets of changes and potentially 2 separate sets of code paths and everything else, so you can actually do that transition at separate points in time. And I would 100% you just do not change any RegTech solutions. Like, take a product that works for you and use it. Try your hardest not to customize. The more you customize, the more it won't work over time.
We have 5 minutes, so we're going to take one more question. It says, do regulators have a role to play in addressing misinformation by the media?
Misinformation by the media?
Yeah.
I'm happy to have a.
Yeah, sure.
I'm going to have. I don't know if this is where the question was going, but if you look at what's happened in America recently with SVB, the fact that social media is so strong now, they talk about bank sprints rather than bank runs. So obviously, if everyone starts to withdraw their money really quickly, even if the bank on paper was strong enough, you're going to put that. And as we saw with SVB, it then went under. And I think one of the bits of information I did read is the regulators were questioning the ratios that they've been using to measure the effectiveness of the company, because all of the ratios were showing that the company was fine. But because of the acceleration, something like they lost 70% of their deposits in 3 to 4 days. I think the last time something happened, it took 30 days. So what the regulator needs to do is just help us think about how we can contain this, because we all have resolution planning as well, where we do our best to ensure that in a difficult situation we remain solvent or have a plan for exit. I think this is something that the regulators and financial services industries will need to continue to work together on. I don't think one or other can solve it on their own.
I mean, I completely agree. I mean, I think just the pace of how quickly the downfall happened for these banks just caught everyone by surprise. And I think regulators do need to think about what changes they need to put in place to capture that, in a more timely fashion, so that things could be kind of addressed. But how do they address them? That's the next challenge.
So we're going to just wrap up with both of you if you have any final comments to make.
I think for me, I'd just say take it back to first principles. Regulatory reporting and compliance reporting, you have the sets of rules. We just need to figure out how to apply them and apply the right data to that. So even in a complex environment, it doesn't need to be complicated if you've got the right foundations in place in the first place. So that would be my thing. Keep it simple.
And mine would just be think about your data. Like, honestly, back to the first principles again, just at the data level. Make sure you know what how you're setting up your data, how you're describing your data, model it, and I think your life will be an awful lot easier.
Well, thank you very much, both. Thank you for joining us. We have wrapped up our session, and I think I'm going to hand over to Aaron.